Hi, this is Rudy Martin for Uncommon Wisdom Daily TV. The uncertainty in the global marketplace is forcing investors to search for safety, and this move into safe haven investments has been hurting equities, including some that pay huge dividends. So, if you're looking for growth and value, and you're willing to take some risk, consider telecommunication stocks. Even in the European telecom sector, there may be some deals to be found. Many of the biggest names there in the industry now pay dividends of more than 9%, and their relative yields are rising. For example, shares of Portugal Telecom are yielding more than 12%, and France's Telecom's dividend is almost that high. Among these companies, my inclination would be to select Telefónica, ticker symbol TEF. It has a huge exposure to the high-growth markets of Latin America, and it generates more than $10 billion a year in free cash flow. Plus, with a yield of 11.3%, you get paid to wait for the Europeans to sort out their political differences. But like I said, a trade like this carries some pretty big risks. For one, telecom companies can and do cut dividends. And that's exactly what happened with Turkcell, Turkey's leading mobile phone operator. More recently, Israel's Partner Communications dropped its dividend and the stock tumbled to record lows. And that brings us another danger I want to mention. Dividends don't always cover a decline in the stock price. If your shares lose half their value, a 15% payout doesn't help much. And while a higher yield does provide support for a stock's valuation, telecom shares are likely to be dragged down by a broad market decline. However, if you're intent on getting into the sector, I would suggest looking at the emerging markets because they offer the best combination of income and growth. Subscribers to my Emerging Markets Winners newsletter know I like China Mobile, traded on the New York Stock Exchange under ticker symbol CHL. It offers a solid 4% dividend yield, and it has a dominant share of the Chinese mobile phone market despite not yet offering the iPhone. The stock is trading right around its 20-day moving average, which is in a clear uptrend. Outside of China, there are a couple of other telecom stocks I have my eye on. PT Telecom of Indonesia has an indicated yield of 8.3%. However, this is more a play for longer-term investors. If you're looking for short-term performance, I'm not ready to recommend it yet. A better pick for immediate returns may be America Mobile, ticker symbol AMX. It recently acquired Teléfonos de México, which could boost earnings in the next year. And it may make further inroads in the Brazilian wireless market, which remains very competitive. Overall, America Mobile has less headline risk than many other stocks in the sector, so I would be aggressive, especially if it dips to around $22 a share. When playing the telecom industry, you have to be aware of the two biggest risks these companies face: price competition and regulation. However, if you're willing to live with those risks, telecom shares are offering some of the strongest yields in the market today. Factor in the fast pace of growth in the emerging markets, and you've got a winning combination. I'm Rudy Martin for Uncommon Wisdom Daily TV. Thanks for watching.